about many topics like career awareness, financial consultant, financial planning, and wealth management. And the last round we are talking about that personal finance and money budget, efficiency planning, cost and speed and quality, and advertisement, which all. So at this time we are going to move on about analyzing option chain. So first of all, we are going to study and watch and learn at the same time about analyzing option chain. What does analyzing option chain implies? Here we can here we going to take a look about this analyzing option chain. This one. So first of all, welcome you all to a very important which is about how to analyze option chain. And so if you have been following my feed, which I take every walks of life, and then you might be aware that I do talk about what could be the possible support or resistance levels for Nifty. We often talk about Nifty and Sensex. We are going to talk about strike price, which would come later on. Since I do talk about what could be the possible support or resistance levels for Nifty, now many times the viewers tell me that you have not discussed in any of your YouTube videos as how to interpret the first one. This is from the requested from the users or the subscribers, how to interpret and analyze the option change. How to interpret and analyze the option chain. I guess and heard that you often heard about this analyzing option chain and option trading, day trading. Those who are not beginners does to market transactions. So let's move on. And I've seen that your wish or your command is definitely going to be honored, and that is why this week I'm not only going to talk about the various components that appear in the option chain. You got it? I'm not going to talk only the components like that. So I'm going to talk about that various components that appear in the option chain. Various components did appear in the option chain, like put chain, call buyer, seller, and the bull is the bearish in the stock market. After learning and after watching this video without any gap, then you would capture that what is the bearish and bullish and stock market basics, transaction, option trading, and analysis, everything about that. You're gonna catch up that. So let's move on. I'm also going to tell you how can you go use these components to identify the probable support and resistance either for any stop or for the indices. Let me write in short form. Let me write in short form stock or indices. Let me write in the index, okay, which is completely linked with mutual fund. That is a type of investment options too. Now let's start with the basic terminologies in an option chain. So whenever I try to read an option chain, you will see that the screen contains true. The screen contains true. This will be clarified later on in a short while. So don't worry about that, what is screen true and all. It is the basic terminologies. Okay, in case of an option chain, so the screen contains true and major components, which is a call side and a put side. Which is call side and a put side. So remember that any option has two types. One is call option and the other is called put option. Just wait me a little bit. We have a little space to make summarize or to go for a depth, to go for in-depth details about this. Okay. If we are hurry enough, then we almost jump into the important context. So by misleading that, I don't want you to catch up with those blocks. Let's see, this is a call side and this is a put side. Okay, call side and put side. What call is the screen true? Any option has two types. Any option has two types. Okay. Any option has two types. You must remember that any option has two types. One is called call option and the other side is put option, which I already stated above. So now let's start with call option. Let's start with call option here. We're going to start with call option. If I'm talking about call option or calls in general, calls option may be known as calls in general too. There are always two parties to the contract. There are always two parties. Two parties to the contract, right? It's unavoidable. There are always two parties to the contract. One is called buyer and one is called seller. There are always two there are always two parties to the contract, and the first one is buyer and the second one is seller. Okay. So I'm not planning to move in a hurry. So I'm gonna move it slowly and steady so that you can catch up with all the tiny elements, tiny things without hurrying, which would complement in your future studies or higher education or in your professional life too. Okay. I think this is very clear. Earlier I used that the pen color is black. Now it's not black, it's nearly dark green one. Call option. So now let's start with call option. If I am talking about call option or calls in general, as stated earlier, calls option and calls in general are the same thing. One is called buyer and one is seller. And always remember, call buyer is bullish about the market and call seller is bearish about the market. Okay. So to understand, I'm just making some illustration here. Call buyer. In case of call option, there are two parties that call buyer and call seller. Call buyer or call seller. Okay. So now we have two parties in the contract. So we have already stated that in the above statement, and call option or calls in general are the same thing, and there are always two parties to the contract, and there have to be two parties to the contract, and one is called buyer and one is called seller. And always remember that called buyer is bullish about the market. Called buyer is bullish about the market. And what is the other one? And the other one called seller is bearish about the market. Called seller is bearish about the market, right? Because there are two contradicts reviews, which is the reason why trade is going to take place, right? Also, remember one point that if I'm talking about a call buyer, he has a right to buy. In case of a call buyer, if I'm talking to the call buyer, he has the right to buy. He has the right to buy. Right to buy. And similarly, a call seller, when we are talking about a call seller, he has an obligation to sell. He has an obligation. Obligation is future terms, something to be paid or to receive in some near future. So obligation. Obligation is simply implies that it's assurance or promise. Obligation to sell, right? Hope that you got it. And if this was too much for you, and if you did not understand this very well, it doesn't matter. That don't forget that we're gonna move it. We're gonna move on, and if you are really concentrated and give your head, your brain to the topic, then you will surely catch up with those. So moving on to the next one, which is put option again as usual. Put option will have two parties. Okay, we're gonna move on. Here we put option. Sorry, put options. Okay, let me repeat this. Moving on to the next one, which is put options. So I'm sorry that for misspelling as well. Put option will also have two parties. You have one parties and the other side one parties. That put option has two parties, right? Put option has two parties, and one is a put buyer. A put buyer, one is put buyer, and one is a put seller. Put buyer and put seller. I'm sorry. Put option has two parties, and first one is put buyer, and the second one is put seller. Put buyer is bearish. Put buyer is bearish nature, and put seller is bullish. Bullish. Here it's a little bit different. Exact opposite, right? The put buyer is bearish, and poor buyer always have the right to sell, and put seller have an obligation to buy. Just as the opposite case of the first one, an obligation to buy. Again, if you have not understood what is this all about that, so you can check that NSE option from the Google search. If you are not clear about this, you can check NSE, National Stock Exchange site. Okay, you can Google this. I'm gonna show some. I'm gonna show here a sample of text, but which is not a live one. So sample text, and you may grab some ideas, some to enhance your knowledge about this. Okay. So in case of put buyer, there is right to sell, right to sell, and put seller, and, and obligation to buy, and obligation to buy. This is just as an exact opposite of this call option, call buyer and call seller. So we can move on. This is exactly for those beginners and for non-commerce background, those who are interested in studying and entering to the stock market transaction and mutual fund transaction, especially in equity transaction. So this is just for catching an idea and ideal language terms used, and what is bullish and what is bearish, and the options and so on. Option trading, day trading, intraday trading, and holding, positioning, everything about the demat account, how to open demat account, and how to engage it. So let's move on. Option chain. Here we got that strike price is here. This is strike price. Okay, strike price. This is National Stock Exchange and market data calls. We have everything bid ask price, bid quantity, and changes LTP last traded price. Everything. This is you can check by yourself. Okay, I'm just showing here just for information. So you can Google and check it out on the live moment at the live moment. So you can ask them anything unrelated or related or anything, any problems arise or any doubts arise, then you can learn it. Regulation is here, learn is here, resources, many resources over there, and presentation from the MS Excel. MS Excel is also. This is the investment side, LTP's last traded price. Okay. So this is option chain. What is option chain? Now let's try and understand what is an option chain and how to look up for it. I have just typed NSE option, that is National Stock NSE option. Just type from the Google search bar. This is the first search result. At the result page, suppose you type anything BSE, Bombay Stock Exchange. So just type and press enter to see the results. This is the first result on the NSE site. Okay. So this is the first search result. There are two types of options which calls two types of option, which is the first one is calls and puts. So let's just say that I'm talking about Indonesian bank, and just for example, Indonesian bank, we are taking this case as Indonesian bank, Indonesian bank, in sake of an example. Look all this middle column. You can see the strike. Just take a look middle column. This is middle column. Okay. Here in middle column there is strike price. You can see by yourself that in the middle column you can see the strike price. All these multiple strike price are chained together, and that's why the name option chain. These strike price are chained together, so it is called the option chain. Let me repeat once again that this is not live one. This is a screenshot which I'm taken from that Google search result. So you can see it by yourself, then check it out. The strike price, LTP, everything, investment bid, everything that. So that you'll get to know that what actually is in it, the volume, the changing pattern, and last traded price, and the bid price, and the ask price, and the strike price, which bonded together and to make a sample of that option chain. Okay, and these multiple strike prices are chained together, and that's why the name is called option chain. So moving on to one or more important context of the option chain, that is known as the expiry date. So we know the expiry date too. What is expiry date? Moving on to one or more important contexts of the option chain. Moving one or more important contexts of the option chain. From here you can move that. Well, moving one or more important context of the option chain, then we'll get that expiry date. Expiry date, you'll get that, okay? After moving one or more important context of the option chain, then we'll get the expiry date too. This is the sample case. So we can move on. See here too, I put this sample case. This is not live one, the screenshot taken from that analysis site, the first result and the first one. The first result and the first one which I taken from the option chain expiry date. So the contents of option chain expiry date. Contents of option chain expiry date. Moving on to one more important contents of the option chain, that is known as the expiry date. Let me write here. Moving on to one or more important content. Moving on to one or more important content of the option chain that is simply known as expiry date. What is expiry date? So we are very clear about what is expiry date. Expiry date is moving on to one or more important content of the option chain that is simply known as expiry date. Okay. Here, this is market data, invest, analysis, and trade and regulations and resources. Learn is except it's not essential here. The volume, LTP, last traded price, and the bid price and the ask price is here. Here the strike price is down here. So the strike price are here bonded together and multiple together, that's give rise to the expiry date. Got it? I hope so. I got it. Now moving ahead with the example of Indonesian bank, which we have taken earlier as an example of Indonesian bank. Now, if I do a drop down here for expiry date, here you can see that there are only 3 expired available, which are these 30 June 2022. Got it. If you roll up here, you get the 30 June 22 and only 3 expiry date is available. I'm talking about an index. Then you will have a weekly expiry as well as monthly expiry date. Weekly expiry date and monthly expiry date would be given here. We'll get after searching that, but in this case there are only 3 available periods here. Okay, if the figures and the prolongs are more elongated, then you can get a more available period, like more than 3, more than 4, more than 5. So in case it does make some sense. In case of stock options, you will have monthly expires. In case of stock options, you will have monthly expiry date. Okay, monthly expiry date in case of stock options only, right? Here we did one. Here this is strike price. All this is strike price. And LTP, last traded price, and the bid price, AUX quantity, and AUX price is there. And the equation that is also given that the period and the option chain and the strike price. Here in options to which we have already learned that call options is there, and this side put options is there. Okay, so any options has two types. Any options has two types. Okay, one is call option and the other one is put option, which is completely linked with the strike price. You can have weekly expiry date and monthly expiry date, but in monthly expiry date it must be in the case of stock options. In case of stock option, you can have monthly expiry date. So we are still on the topics of contents of option chain strike price. So I'm going to talk about an index where you'll have weekly and monthly expiry date. Here, not only strike price but premium too is there. Premium too involved here. So I'll give some illustration here. Since premium is entered here, so now to explain this, let's take an example of Mr. X and Mr. Y. Then we try to explain with some illustration so that you may have an idea, you may get some idea and knowledge regarding that option chains, option context, and call and put option and contents of option counter through the strike price too. I'm sorry. Strike price, strike price premium, strike price premium we have. So let me repeat that. Let's talk about that index where you have weekly and monthly expiry date, which I've told you that not only strike price but premium is entering. Now to explain this, we're going to take some example like Mr. X and Mr. Y. Okay. So this side, Mr. X is buyer, Mr. X is buyer, this is Mr. X and buyer side, okay? So Mr. X who is a buyer and Mr. Y who is a seller. And this side, Mr. Y, seller, this is Mr. Y, seller. Till now we are very clear, I hope so. Let's take ABC Limited. This is the name of the stock, okay? ABC Limited involved here. ABC Limited is just the name of the stock, and last traded price of the stock is assumed to be 940. Last traded price. LTP is last traded price is 940. Now Mr. A believes that I felt that this stock market goes some premium too. So you go and check out in a few more details about this, okay? And that is the reason why I want to buy a call option for ABC Limited. Want to buy a call option for ABC Limited, and last traded price is 940. As you can see here, last traded price is 940. See, this one is last traded price 940, and Mr. X is buyer and Mr. Y is seller. And that is the reason why I want to buy a call option for ABC Limited. Now Mr. X says I want to buy this call option with a strike price of 900 rupees. So Mr. X want to buy a call option. Mr. X want to buy a call option with a strike price of 900. Okay. So in this case, strike price 900, because Mr. X wants to buy call option with a strike price of 900 rupees. Mr. X is buying a right to buy. Since he has a right to buy, Mr. X has right to buy. Suppose if he's buying at 900 and the last traded price is 940 and the strike price is 900. So we may also say that last traded price of ABC Limited is 940. So life is set for Mr. X and he is going to buy at 900. He's going to sell at 940. Just for some note here, buy at 900 and sold at 940 and 40s. So he earns 40 for this 40's profit. But the seller is going to allow that no new sellers exist, and saying that if I'm allowing you to do transactions, you need incentivize me. You need to give me a reward for that. And how much is going to be the reward? The reward is in question. How much is going to be the reward? So the reward is in question. Reward is going to be difference between the last traded price of the underlying asset and the strike price. So let me write here. Reward is difference between the last traded price of underlying asset, the last traded price of the underlying asset, and the strike price. So I put everything in short form since the limit of space. So we can conclude here. Last traded price is the 940 and strike price is 900, and 940 minus 40 is 40. That is the premium. It's not profit, it's the premium. Okay, so rupees 40 is going to be the premium, and who is going to pay and to whom? And call buyer is going to pay to the call seller, who is going to get incentivized. Okay, so we can write here ABC Limited last traded price 940 and rupees 40 as a premium. So I hope that everything is clear, neat and clean. And now after that, if anything unclear and any doubts or any expression is you want to do that, you want to give feedback, then you can do that at the comment section. So thank you for watching, following my YouTube channel, and please do share to your near and dear ones, and it doesn't matter and much that, so you can share to the strangers too. You can share to the WhatsApp group and any types of social medias, and let's learn together through online. See, our world is becoming online, so we can do everything, catch up with new friends, meeting strangers, and learning, giving exams. Everything is online. So thank you so much for watching my channel, and please continue to do so, and please do on subscribe my channel. If you are not subscribed my channel, so subscribe it, and if you are already subscribed it, please tell others to subscribe it. This is a tutorial academy, and especially this channel is for financial planning, mentoring, career awareness, and wealth maximization. And we provide many products and services like billings, recharge, and website designing, and application coding, programming language. You'll find me a lot. Thank you guys. Have a nice time. Have a great day. So we'll catch up after 1 week. Thank you.